Ladies and gentlemen, good day and welcome to H2FY24 results conference call of AVP Infracon Limited, hosted by Kiran Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Preeti Bhardwaj from Kiran Advisors Private Limited. Thank you, and over to you, ma'am.
Good afternoon. Thank you. On behalf of Kiran Advisors, I welcome you all to the conference call of AVP Infracon Limited. From management side, we have Mr. Prasanna, Chairman and Managing Director, Mr. Vasant, Director, and Mrs. Priyanka, Company Secretary. Now I hand over the call to Mr. Prasanna, Chairman and Managing Director. Over to you, sir.
Good afternoon, everyone. I warmly welcome each one of you for the first conference call of AVP Infracon Limited. Before we get deep into the specifics of our performance during H2FY24 and FY24, let me offer a brief overview about the company, AVP Infracon Limited. Also known as AVP, we were established in 2009 and have since emerged as a prominent infrastructure development company in India. As a multi-domain infrastructure trusted organization, AVP has effectively executed technically complex and high-value projects in various segments, which includes expressways, national highways, state highways, flyovers, bridges, viaducts, irrigation projects, urban development, and commercial and residential projects. Over the past one decade, AVP has excelled in diverse projects, which includes government contracts and national initiatives, cementing its reputation as a trusted construction firm in the country. The company has actively pursued construction opportunities, roads, bridges, irrigation, canal projects, flyovers, and industrial areas, primarily focusing on projects in the state of Tamil Nadu. AVP boasts a robust track record of timely project execution with a strong emphasis on the workplace safety. Our in-house capabilities allow us to manage projects from conceptualization to completion, ensuring a fast turnaround time from acquisition to launch the completion. We will also prioritizing tax mitigation, which improves return on investment. We are dedicated to building the future of India with a strong foundation of integrity, teamwork, and excellence. The company believes that these core values are not only fundamental to its own success, but also vital for the prosperity of its clients. Upholding integrity and honesty as top priorities, AVP conducts business with transparency and trust. Taking ownership and responsibility for each project, the team AVP ensures accountability at every step, emphasizing the power of teamwork. Collaboration is fostered to achieve collective goals efficiently. Passion drives AVP to meet and exceed client expectations by understanding and fulfilling the requirements diligently. With a strong focus on quality and efficiency, AVP consistently delivers exceptional results, setting a high standard in the construction industry. AVP's commitment to delivering high-quality construction services to our clients while prioritizing timelines and budget adherence. Additionally, company's dedication to the growth of its employees and its pursuit of leadership in the construction industry are admirable qualities that contribute to our success. In our 14+ years of industrial experience, we have successfully completed many projects. At present, we have ongoing projects accounting to 250 crores plus, showcasing our ongoing commitment to delivering excellence in every undertaking. In fact, that AVP owns its prominence gives them a cost advantage. Presently, we possess batching plants, graders, soil compactors, pavers, boom places, backhoe loaders, tandem rollers, wheel loaders, tippers, transit mixers, pumps, and other earth-moving equipment. Our client base includes organizations such as National Highways Authority of India, Ministry of Road Transport and Highways, Public Works Department, the Government of Tamil Nadu, the Highways Department, the Government of Tamil Nadu, Greater Chennai Corporation, and many other corporations in the state of Tamil Nadu, which underscores the trust and credibility the company holds in the infrastructure sector. Adding to it, we have two RMC plants at Tirupur and Coimbatore, which are used in the catering of domestic market. The capacity is 1.25 m3 each plant per hour. These strategically located plants provide the company with the capability to efficiently supply high quality RMC to projects in these regions, ensuring timely delivery and consistent product quality. Talking about the NHAI initiative, government initiatives are pivotal in driving growth and enhancing transportation infrastructure nationwide. The successful implementation of the hybrid annuity model. The hybrid annuity model, HCAN, also called as HAM, has been successfully employed in over 660 road projects, exceeding a total value of $10 billion, increased public-private partnership, PPP engagement. The National Highways Authority of India has adopted the TOT method, Toll Operate Transfer model for 100 highways, resulting in investment which exceeds $2 billion. NHAI has set Guinness World Records for construction achievements, including a continuous 75 kilometers single-lane bituminous concrete road, completed in an impressive time of 105 hours and 33 minutes. Another Guinness World Record was secured through collaboration with Maha Metro, constructing the longest double-decker viaduct in Nagpur, featuring a highway flyover and metro rail on a single column. NHAI's digital transformation is comprehensive, with the adoption of a cloud-based and artificial intelligence-powered big data analytics platform called Data Lake. Project management software has been introduced, marking a shift from manual to online portal-based operations, covering project execution, timelines, and an alert mechanism. All project-related documentation, contractual decisions, and approvals are now exclusively processed through the online portal, showcasing a streamlined and digitized workflow. The highest innovative approach, record-setting achievements, and strategic digital shift collectively position the organization at the forefront of India's road and highway development, reflecting a dynamic and efficient transportation landscape. And a few things about our financial highlights. In the financial year 24, our company's consolidated financial performance demonstrated remarkable growth and operational efficiency. We achieved operating revenue of 160.87 crore, marking a 39.91% increase over the previous year. Our EBITDA saw a significant rise of 54.32%, reaching 36.09 crore, while the EBITDA margin expanded by 210 basis points to 22.43%. The net profit notably soared to 54.87%, reaching 18.67 crore. This growth is further delighted by an 112 basis point increase in the net profit margin, now at 11.60%, and the earnings per share surged by 11.49% to 7.47 rupees. These figures not only reflect our financial health, but also mark substantial progress towards our strategic growth objectives. The consolidated H2 financial year 24, our operating income stood at 93.88 crore. The H2 EBITDA reached 21.42 crore, which is an increase of 45.95%, while the EBITDA margin improved significantly by 90 basis points to 22.81%. Net profit for the H2 was up by 56.65%, which accounts to 11.39 crore. The net profit margin increased to 12.14%, showing a 128 basis point increase. Additionally, the earnings per share for the H2 grew by 12.87% to 4.56 rupees, underscoring the sustained positive trajectory in our financial performance. In the standalone H2 of financial year 24, our operating income amounted to 87.85 crore with an EBITDA of 19.76 crore. We achieved a net profit of 11.02 crores. For the standalone FY24, our operating income amounted to 151 crore. The EBITDA of the same stood at 43.38 crore, showcasing sound operational management. We experienced a net profit of 12.11 crore, primarily attributable to extraordinary items from the preceding fiscal year. The way forward for AVP. Since our IPO in March 2024, we have significantly increased our bid capacity due to the new capital inflow, allowing us to pursue more projects in the coming years. Our focus on timely execution, particularly in Tamil Nadu, combined with our strategy of maintaining our own equipment, fleet, plans and implementing cost optimization has led us for improved margins. We are now well positioned to undertake larger and more complex projects, thereby enhancing our market presence. Our commitment to innovation, operational efficiency and strategic investments will drive our future performance. We remain dedicated to delivering value to our stakeholders and contributing to the infrastructure development of the region we serve. As we move forward, our commitment to sustainability, innovation and operational excellence remains unwavering, positioning us for continued leadership and success in the marketplace with the support of our stakeholders. Now I kindly request to open the floor for question and answers. Thank you once again for your presence and continued support, and expecting always the support in the future. Thank you all.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. The first question is from line of Nandan, individual investor. Please go ahead.
Hello, sir. First of all, congratulations on a very good set of numbers. I have a couple of questions to you.
Yes, please.
The first question is with respect to our joint venture that we have with the CDR and the CWP. So as of now, we have this 10 and 20% of partnership with the joint venture. So my first question is, sir, that in the red herring perspective, RSP, we have mentioned that we have submitted the bids of 322 CR, which is awaiting. So what are the percentage of win that we are expecting from the bids that we have submitted?
So we normally expect around 40 to 50% of big wins. Based upon if it tender for 100 crores, at least 40 crores to 50 crores will be winnable number. And this was the case till now, and we are expecting the same to continue. And we may expect any time for the bids to be opened as the election code of conduct is just over. We may expect any time for the bids to open and the results to be published.
And sir, the second question is that in the earlier interview, you said that we may get the higher portion of the share as well in some of the bids in the future as well. So, do we expect some higher percentage of share from the joint venture bids?
Yeah, definitely we'll be getting. This is case-to-case changes. This proposal has been got from their side, so we were having a minority stake. And where the project which we are interested and which we want more of our execution to be, there we can always take majority stake and we can operate on the stake.
Okay, sir. And just one more last question. So, what's our FY25 and FY26 guidance from the company, and also the order book guidance if you can give?
We are expecting for a possible jump of what we were doing till date, and even better than last year. We are expecting anything more than 50% increase in our turnover, which will be a very conservative number and which will be a very profitable number too.
Okay, sir, we are expecting the similar margins. Will it be sustainable?
Yes, that will be always sustainable.
Okay. And sir, if you can shed some light on the order book that you are expecting for this financial year, if possible.
This financial year, we are expecting an order book of what we have. A fresh order book of 400 to 500 crores are anticipated this year.
Okay, sir. Thank you for your answer.
Thank you very much.
Thank you very much. Participants, you may press star and 1 to ask a question. Next question is from one of Nirav Shah from SSG Capital Management. Please go ahead.
Hello, sir.
Hello, sir.
Sir, is AVP Infracon is anyway strategically planning to go beyond infrastructure projects from the state of Tamil Nadu?
Yes, sir. We are on the lookout. We are preparing a bid in the state of Madhya Pradesh also. Now, we don't have any geographical boundaries. We were concentrating only on Tamil Nadu till date because the size of the project, when we were eligible to participate and execute, we are getting it in Tamil Nadu itself, so we did not cry out. But now, as we wanted to grow beyond limits, we are concentrating on other states also, and we are preparing for a bid to be participating in the state of Madhya Pradesh in the coming week also. So we are not restricting ourselves anymore just within Tamil Nadu.
Okay. And there one more question is that with the fund raised via an IPO, there are some more reserves which are kept with the company which is not utilized for the purpose mentioned in the DISP. So how company is planning to make use of those funds strategically into the project?
So we have planning. As per DRSP, we have 15 crores of funds to be utilized for capex. And as we are going for some fresh tenders, and we may be requiring any number of machinery. We are planning for execution of purchase of the machinery and installation of the chain using those funds. And apart from that, what we have planned for the working capital, we will be using it for the working capital.
Okay. Thank you, sir.
Thank you very much.
Thank you very much. Participants, you may press star and 1 to ask a question. Next question is from the line of Pratik Chaudhary from Samarthya Capital. Please go ahead.
Hello.
Hi, sir.
Hi. The 400-500 crore figure that you mentioned, that is for the expected order inflow for FY25.
Great.
And what sort of execution period would these orders entail?
Sir, all these orders what I'm talking about may range from 18 to 24 months.
Okay. You could see, and you currently have 250 crore worth of orders already in hand.
Yes.
Which are being executed. And what is the execution cycle for the 250 crore?
This 250 crores will be completed in this year. A small spillover, if at all happens, that may be carried out to the next year. That is based upon the site conditions or whatever it may be. And we have our completion time till next half yearly for the project what we are having in our hand. And apart from that, the new project what we are acquiring, we may also be required to start those works also. That we'll be having a 6 months, the second half yearly for execution of the new work. And that will be also adding to our turnover, which will fill the gaps of the spillovers of the current work.
Right. Could you, because 250 you said the large part of it will be executed in FY25 itself.
Correct.
And 400-500 crore is a big enough number. If we assume 100 of that going into this year, so then could our top line be hypothetically be upwards of 300 crore this year?
Yes, we are expecting that number, but I'm committing 50% of our turnover, in hiking the turnover from our top line this year.
Okay. Conservatively over saying 50% growth.
50%, no, more than 50%, somewhere around 250 crores or something like that. That is what we have planned. Anything over and above that will be good for the company and good for the investors as well. But we are not, we have clear plan and we have strategy for 250 crores.
Got it. And would you foresee the 400-500 crore yearly order inflow as something which will happen now in the normal course of business over the next few years? Or as our scale has improved, as our ability to execute these contracts has improved, and as we perform more on these large contracts, so do we see this number also going higher, yearly order inflow?
Yearly order inflow will be definitely going higher, and we will be expecting to close higher turnover as you are talking about in the next year itself. So that for that execution of around 400 or 500 crores per year, we should be having an order book of at least 1,000 crores in our hands. So the next 25, 26, if we are targeting at 500 crores, we should be having an order book of 1,000 crores at least.
Okay, 25, 26, you're targeting 500 crore top line?
Yes.
Okay. And would your segmentation also change in terms of the end segments that you currently do projects for? Or would it largely stay the same as it is right now?
So this is our home ground here. We are very much practiced doing these kinds of work. And that will be the majority of our top line. And apart from that, we are also concentrating on other infrastructure sectors like irrigation, warehouses, and multi-rise buildings and all. So those also will be adding to our portfolio, but majority road will be the majority of the projects will be coming from the road sector.
Okay. And would there be any major geographical diversification also away from Tamil Nadu?
Yeah, we are planning to explore other states also. There is no restriction or maybe geographical boundaries for us. So we are planning to diversify in wherever the opportunity is better.
And Tamil Nadu alone, can Tamil Nadu alone take you to 1,000 crore order book? Is the market large enough in Tamil Nadu itself?
There are people who are concentrating only on Tamil Nadu and doing more than 2,000 crores in all. There is opportunity.
Okay. Great, sir. Thanks a lot. I'll get back in with you.
Yeah, thank you.
Thank you very much. Next question is from line of Nandan, individual investor. Please go ahead.
Hello, sir. I just wanted to confirm the numbers that did we say that in FY26 we are targeting 500 CR of top line?
Yes, sir.
Okay. And in FY26 we are targeting the 1,000 CR of the order book, right, sir?
No, we are just planning about, we have plans for 25-26 alone. Anything after 25-26, we have to target only after completing this financial year. What I was talking about is with the order book of 1,000 crores, if I have to complete 25-26 with 500 crores top line, I should be having an order book of 1,000 crores when the financial year starts. I was talking about that.
Correct, sir. And sir, you said that we are trying to enter into the Madhya Pradesh MP, right, sir?
Yes.
So, are we going to do some capex there as well to own the fleets, or would we go for the rental model?
Sir, the basic plant and machinery, we should be going for the capex investment. What tender we are participating is around 400 plus crore. And if we are able to get that, it is a HAM project. And we are going with a joint venture with the company. And if that is successful, we have to install all the plant and machinery from our side. And maybe in the movable machineries like tippers and transit mixers and all, we can take rental if that is needed. And if all the existing machinery from our company is 100% utilized.
Okay. Thank you very much, sir. All the best.
Thank you.
Thank you. Participants, you must have star and one to ask the question. Next question is from line of Ritika Jain, individual investor. Please go ahead.
Yeah. Hello.
Hi.
You're audible.
Good evening, sir.
Good evening, madam.
So, sir, my question is regarding your, in light of your, if you got IPO fund, so how the things regarding your tender application and in your working capital?
Your question is not clear. Can you just repeat your question once more, please?
Sorry, sir?
No, your question is not clear. Can you just repeat it once more?
Ritika, can you speak a little louder, please?
Am I audible now?
Yeah, better.
Hello?
Yeah, it's better now.
Hello?
Yeah.
Hello?
We are audible.
Yeah. Yes. So, sir, my question is regarding, since you have got the IPO funding, so how things have changed in regards of your tender application and your working capital cycle? Can you throw some light on that?
Yes, definitely. This strategically decreased our creditors. Even if the debtors remains the same, our credit, some creditors have come down drastically, which is helping us to get raw materials on advance payment and with no credit terms. So we are getting better discounts and we are executing projects with much ease now. And in case of the tenders submitted, there is no much difference between the tenders. We can always apply for tenders. We need not require any financial support for the applying for any tender. That doesn't make any difference even if it is with go for another after the IPO funding company.
Okay, sir.
That's it. That's it.
Okay. Thank you so much, sir. That's all from my side. Thank you.
Thank you. Next question is from Pratik Chaudhary from Samatya Capital. Please go ahead.
I want to touch on margins as well. So till now, as I understand that I attended the pre-IPO call for your company. And where you mentioned that till now we've been doing 50-60 crore of, is the maximum project size that we were usually taking before the fundraise. And now we would probably be bidding for 100-250 crore projects as well. So in terms of the competition difference, would that in the size of these projects, would that translate to significant or decent margin increase if we take up larger projects?
There will always be a difference in the size of margin based on the size of the project. Having 10 projects in the size of 10 crore and having a 100 crore project in one place definitely makes difference. It will always increase the percentage of profit and hope to achieve the same increase in the profit margin wherever possible. We are trying to achieve the same.
And we had mentioned that we get around 30% of project value as bonus if we complete our work on time.
Not 30%, it will be 5%.
Oh, 5% it is?
Yeah.
I misheard it last time. And what about our, I think we had some 300 crore in Telangana, which we had bid for under the JD.
Correct.
What?
No, it is not yet open. Only after this code of conduct is cleared, after the election code of conduct gets cleared, then only they will be opening the tenders. It is all still the status quo for that tender.
Okay. And the 400-500 crore order inflow that you are expecting, so did that estimate include this 300 crore JD?
No. We have bidded independently on individually capacity.
Okay, this is separate. 400-500 is you individually bidding.
Correct.
Oh. And do you expect any improvement in our receivable days going forward?
Receivables, hopefully we will be coming down. But there won't be much of a difference between what we were having in the previous years or the current days. As it was not bad earlier. So, it was a decent turnaround time only when infrastructure is concerned. And we are always trying to improve, to cut down of their credit days. So, we are expecting some decrease in the credit days, but not much. It won't take much of difference.
Okay. Thanks a lot, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Mohan Chand, an HNI investor. Please go ahead.
Hi, am I audible?
Yes, sir, your audio is audible. Please go ahead.
Yeah, hi. Thanks for giving this opportunity. My question is regarding this cash flow, which you briefly touched upon in your last answer. So, if I'm not wrong, in one of these three IPO meets, we were talking about the receivable days, around 2.5 months. But this time it seems to be on a much higher side. And in revenue terms, in number terms, the receivables has increased from 10 CR to 64 CR, whereas the change in revenue is from 110 to 154 CR, 160 CR. So any specific reason for this substantial increase in receivable days?
So normally we have as infrastructure segment, we have our billings happening mostly in the third and fourth quarter. Third quarter end and the fourth quarter, all the 3 months. This time it happened only in the last 2 months of the fourth quarter. Mostly we did billing of around 40 to 45 crores that were done in the month of March, which was a reason for the higher receivables, of which most of the receivables have happened in the first quarter. And it comes in the same receivable time, and there is not much of difference in that. And previous year, the receivables happened in time. That was because most of the funds were immediately released from the government. And this time, being the election on the corner and code of conduct implemented, a few payments we did not receive. Once after these Tamil Nadu elections are over, since we had our elections in the first phase itself, after the completion of the first phase itself, we started getting our payments. And that decreased, and after this results, we will be getting all the pending payments in this month itself.
Okay, great. And so ideally, sir, we should consider how much would be the ideal receivable days we should consider going forward?
60 to 90 days, sir. Maximum is 90 days. And on an average, you can have it 60 to 75 days. That's an average receivable.
Okay, great. Thanks a lot, sir. This is all from my side. Thank you.
Thank you.
Thank you. Next question is from Vineet, individual investor. Please go ahead.
Hello.
Yes, Vineet, go ahead. You're audible.
Good evening, sir. I just wanted to understand, what are the credit terms in terms of guarantees, bank guarantee and performance guarantee that you deposit prior to the project?
Good evening, sir. The credit terms means you should be very much particular about which you are asking. We submit bank guarantees, performance bank guarantees for all our projects, and I don't get what is the credit term what you are talking about.
No, I mean, what percentage of the project that you...
Yeah, correct. Credit, this bank guarantee for PBG is around 6%, and 3% will be released at the end of the project, and 3% will be released after the defect liability period is completed.
So it's around 6%, like that?
Yes.
So also, sir, how do you see, is there any effect of monsoon as of late that has been delaying?
It will always be there, sir. We cannot stop any natural calamity to affect our business. This is against this. We are running our business not under any roof. It is open to sky, and we have to depend upon all these things. So we take normally this monsoon period. We consider 30 days in a year as a holiday period for us. This is when we calculate the working time for our project itself. We calculate 30 days monsoon, at least 30 days of monsoon, and other whatever, not only monsoon, anything we just leave 30 days of time period as non-workable.
Got it. That's it from my side, sir. I'll get back on this.
Yeah, thank you.
Thank you. Next follow-up question is from Nirav Shah from SSG Capital Management. Please go ahead.
Hi, sir. With the completion of the post-election, how do you expect the government infrastructure boost up, which will be helping the company for bidding the tenders and getting the work ahead?
The infrastructure is always on the rise, sir. Even if it is going to be a new government that is formed or the existing Indian government, the infrastructure segment will always see a growth. And definitely we'll be getting better results and better projects from this government.
Okay. And when we are getting the orders from the government, so in those agreements, do we have the cost plus increase in the prices of raw material to be passed on to the against contract value? And if yes, then what is the base value above which increase can be passed on to the government?
We always have this cost escalation for the projects what we are carrying out. There is always escalation clauses deployed in the projects. 5% is normal condition, and it can be, it also can be paying more than 5% also. Most projects will be completed within 5%, and if it is going above 5%, we have to go for a revised sanction, and we will be getting that also.
Okay. From your past experience, how do you can say that the cost increase or the cost inflation is being recognized as a tender value, and how effectively it gets as a receivable to a company?
I don't get you. Can you please repeat the question again?
Yes, sir. From your past experience, whenever there is a cost escalation has been done, so how do you expect it that the additional margin of that escalation of the price gets converted in terms of receivable from the government tender?
So we will receive just anything pertaining to cost escalation will be calculated, and we will be submitting the bills then and there. Each running account bill itself, we will submit the escalation cost also, and getting it done, and we will be receiving it along with the running account bill. There is no time frame or something postponement of receiving of escalation or within escalation bills and all. We'll get it done then and there with the work bill itself.
Okay. Thank you, sir.
Thank you. Thank you very much.
Thank you. Next question is from Amit Bhatt from MIT Engineers. Please go ahead.
Yes, sir. The main risk in any fast-growing infra company is continuous arrangement of the funds for the capex, working capital, for the security deposits and retention money. So, sir, how our company, because our company is really targeting a great growth in coming 2 years, the 4x, your growth you are talking about, as far as the order book is concerned. So, how our company will, take care of the requirement of the money for, this growth? And second, is it a debt or a preferential allotment of the shares, or any other way company is thinking about? Please throw some light on that.
We are planning for some preferential allotment after completion of one year at least, not immediate or something the next 1 or 2 months. We are planning about after completion of one financial year, after completing this 24-25 with one is wanted, and then we can think about this preferential allotment or preferential allotment. And that is always there. We always get debt at a very reasonable cost. Being a listed company now and with good financials, there are many offers from banks, because we don't need any fund-based limits for us, and our requirement is non-fund-based bank guarantees only. This bank guarantee will serve us for all the financial needs. Most of the projects we need % bank for the bank guarantee, and 10% we can take mobilization advance, which will be sufficient enough to run that project. And there are projects which have been funded by Asian Development Bank. Those projects, this 10% mobilization advance comes without interest. That will be adding to the profit margin also. So this is how we are planning our finance for the next 2 years.
Okay. And sir, another thing is that one vertical is that of ready-mix concrete. Okay. Now, is there any synergy between your, this construction road business with that particular business, or that business is basically catered to the other customers in that particular area where we are having that RMC facility?
So if at all we require, and if any project comes, if those areas we'll be taking from our RMC plant, and rest of the time it will always cater to the open market and other people. There is a huge demand in those areas, and that is why reason we have put it, and it's a commercial establishment. It has been taken care one of the director. He is completely looking after the operations of those two plants.
And sir, another thing is that because I think RMC after 2 years, RMC is not going to give a big contribution to our top line. It's it's become a very small business. So company planning to, delist that and list it again as a separate company and, or, do some arrangements so that particular vertical, will get out of this company and this company becomes the 100% infra company, and another company is going to be the RMC company, which you can grow with the, other fund raising and all that. So, you have any, that sort of thinking in your company?
As of now, we don't have any plan for delinking this company from that company, sir. We have just merged it recently 2 years ago. So we are planning a big way for the infra company to grow. Once this growth happens, we may take a call about that in the future. But RMC business has a very good potential. RMC business as an individual has a very good potential. You should have heard by now Kamath has invested a good number of fund in RBC Concrete.
Sorry to interrupt you, sir, but RMC basically, I have seen the RMC facility of a company, and it's really good. So what we personally feel that one part is the infra, which is a separate part, and another part is this RMC. Even we can, concentrate on that by, making it another vertical, and we can make it a big thing. Even RMC is a very good business, so that's why,
Correct. I understand this, and we don't have what I mean to say is I don't have any immediate plan to go big in that, and we may take a call after some time. After at least stabilizing this pandemic good company, then I can go for that.
Okay, and again, sir, we would like to congratulate for the such a clear vision. And, we rarely, find out such a aggressive and, management with concrete plan. It's very rare to see in the SME. So really, congratulations. We are proud to have, your company in our portfolio. Thanks a lot.
Thank you. Thanks for the pleasure. Pleasure is always mine.
Thank you very much. Ladies and gentlemen, we'll take that as the last question. I will now hand the conference over to Ms. Preeti Bhardwaj for closing comments.
Thank you everyone for joining the conference call of AVP Infracon Limited. If you have any queries, you can write us at research@kirinadvisor.com. Once again, thank you everyone for joining the conference call.
Thank you. Thanks for hosting the call.
Thank you very much.
Thank you, sir.
On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.